Thank you for your interest in LEG. I'm Frank Kopfinger, Head of Investor Relations and Strategy. So who are we? LEG Immobilien is one of the biggest residential companies in Germany with 167,000 apartments and around 500,000 tenants. We are a pure play, i.e. we only focus on residential business and we only focus on Germany. Roughly 80% of our assets are in North Rhine-Westphalia, which is the biggest state in Germany and represents 22% of the German GDP. Within residential, our focus is also only on one asset class, which is affordable living, and with this we have a high social responsibility. Our tenants pay just around €6.58 per square meter, or around €420 on average per apartment. 19% of our units are rent restricted, and tenants get subsidies from the state as they have only little or even no income. We have a reasonable portfolio valuation at around €1,600 per square meter and a portfolio yield of 4.8%. The portfolio valuation is well beyond replacement costs, which should be in the order of €4,000 to €5,000 without land. We have been named by a bigger bank as first mover to adapt to the new environment of higher interest rates and costs, and shifted towards a cash-oriented steering and made the AFFO, so the adjusted FFO1, our key KPI, as we believe that this is the best cash proxy for investors, which allows best for internal steering, but also for external monitoring and analysis. So how did we do in 2023? Operations have been strong, driven by a strong platform and certainly also tailwinds from the market. On the top line, we grew rents on a like-for-like basis by 4.0% and further reduced our vacancy to a record low of 2.4%. We reduced our investment spending to €35 per square meter, which is in real terms a 30% decline over the 22% level. We sold around 2,000 units in 23 for a total of €155 million. Around half of this will see its cash flow only in 2024. So we have a good starting level for the year already. Those units have been sold at around book value as we don't want to pass on shareholder value to the buyers. Additionally, we put our small new development platform in runoff since late 2022. We finish the current projects, but we do not acquire or start new projects. The remaining cash outflows will be only around €80 million until 2025, and then we are done. So this should be no major concern to investors in group context. The LTV increased to 48.4%, driven by a devaluation of 4.9% in the second half of 2023 and 11.9% for the full year. This is above our midterm target of 45%, but given our cash flow-driven steering and our strong financing structure, which still benefits from low average interest rates of 1.58% for an average of 6.2 years, this has no material effect on our financials. And finally, and this is certainly the highlight, all of this allows us to resume a dividend payment. We propose €2.45 to the AGM in May, and this reflects now 100% of the AFFO as payout ratio. And what do we expect going forward for 2024? On the basis of rent growth of 3.2 to 3.4% and investments of €32 per square meter, which is still significant, we expect the AFFO to increase to €180 to €200 million. And this represents another 5% increase if we simply take the midpoint of this range into account. I hope you found this short elevator pitch useful and it caught your interest. Please do not hesitate and contact the IR team or me in case you want to dig deeper into LEG. Many thanks and have a good day. Goodbye.